Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights that you can use to grow your career or venture. I'm your host, Louis, and today we're going to explore one of the most important financial metrics in business, EBITDA. So, what is EBITDA? In straightforward terms, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a measure of a company's profitability that helps investors, analysts, and business leaders understand its financial performance without the influence of non-operational factors. To put it simply, EBITDA is like looking at a company's income statement, but instead of including expenses like interest payments, taxes, and depreciation, you're only focusing on the revenue and operating costs. This gives you a clearer picture of how well the business is performing in terms of its core operations. For instance, imagine you own a small retail store. Your EBITDA would help you understand how profitable your sales are without considering the interest you pay on your loan or the depreciation of your store's assets. This metric has been around for decades and was initially used by analysts to compare the financial performance of companies across different industries. One influential thinker associated with EBITDA is Joel Stern, a renowned financial expert who popularized its use in the 1970s. Over time, our understanding of EBITDA has evolved, and it's now widely accepted as a key metric for evaluating a company's financial health. Take Amazon, for instance. In 2020, Amazon reported an EBITDA margin of around 13%, which means that for every dollar in revenue, the company generated approximately 13 cents in operating profit. This is impressive considering the competitive nature of the e-commerce industry. On the other hand, companies like Walmart and Target often have lower EBITDA margins due to their thinner profit margins and high operating costs. Another example is the technology sector, where companies like Google and Facebook have much higher EBITDA margins due to their scalable business models and low operational expenses. In 2020, Alphabet, Google's parent company, reported an EBITDA margin of around 25%, while Facebook's EBITDA margin was approximately 30%. These numbers demonstrate the importance of understanding EBITDA when evaluating a company's financial performance. If you're an entrepreneur or business leader, understanding EBITDA can help you make more informed decisions about investments, pricing, and resource allocation. For instance, if you're considering expanding into a new market, EBITDA can help you evaluate the profitability of that opportunity and determine whether it's worth pursuing. One challenge you might face when using EBITDA is navigating the various adjustments and nuances that can affect its accuracy. To overcome this, I recommend working with a financial advisor or accountant who can help you tailor EBITDA to your specific business needs. Additionally, there are many online resources and tools available that can help you calculate and analyze EBITDA, such as financial modeling software or accounting platforms. In terms of research findings, studies have shown that companies with high EBITDA margins tend to outperform those with lower margins in the long run. A study by McKinsey found that companies with EBITDA margins above 15% are more likely to achieve sustainable growth and profitability. Another study by Harvard Business Review discovered that EBITDA is a strong predictor of a company's future cash flows, which is essential for investors and lenders. One approach is to focus on operational efficiency, which can be achieved through process improvements, cost reduction initiatives, or investments in technology. Another strategy is to optimize your pricing strategy, ensuring that you're charging the right price for your products or services while maintaining a competitive edge. In conclusion, understanding EBITDA is essential for anyone looking to navigate the world of finance and business. By grasping this concept, you'll be better equipped to evaluate investment opportunities, make informed decisions about your business, and communicate more effectively with investors and stakeholders. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.